Hi there, Serial Trader here. Let's check in with the major US indices. Now, here's the bar chart of SPX. Now, I'm still liking the idea that we have our small degree fifth wave in place. And so far, that's certainly been cooperating as far as market behavior. So, maybe we have this fairly small A wave down. Maybe this is a B up, okay? And then maybe we'll get something like this. And let me just get rid of the waves there. But this would be fairly shallow, and in fact, I'll throw out the 382 retracement. So maybe along the lines of a 382 retracement. Now, if that's the case, this may not be an overall 1 up and 2 down. This might just be relabeled, and we might actually have an extended third wave where you have a 1 2, but then you have a 1 2 3 4, as long as we don't overlap with this, and then 5 up for a larger third, extended third, and then we have a 4 or 5, and then after that finally a larger 3-wave decline down for possibly this wave too. I'm still undecided here. Short term, however, it looks like we need at least one more leg down before we can consider this correction complete. And that could be a good buying opportunity. So I don't know if this will resolve tomorrow. I'm kind of thinking it'll be into next week, but we shall see. But looking for at least that 382 retracement, okay? And then, but if it stays above this level, 2683, then we have to start entertaining that we're going to have an extended third, and that this impulse sequence here isn't complete, and I haven't labeled it correctly, and that's certainly possible. These labelings are always very flexible as long as the data is limited. But what we do have is clearly some sort of impulsive advance, either complete or in progress, and now we're having some sort of corrective decline. That's the major point that needs to be put forth here. So I'd say one more leg down, and then if we have our parallel channel, we can use this off the extreme of B, if that's V, off the extreme of A. Okay, and then we could do like an equality relationship as well. So we'll do this, right, off of B. There's our equality. So 2693 at the bottom of the trend channel. If you get a nice support there and start reacting up, maybe that's the next trade setup here short term. But we'll have to see. Anyways, still liking the overall bullish outlook, all these short-term iterations aside. And we'll just go over to the candlestick chart now. And from a candlestick perspective, here's the daily of SPX. So, we came down, just touched the T-line, and then we had a reasonable bullish day yesterday, still above the T-line. And today was a very clear doji star, tiny real body. And again, still above the T-line. So, I guess as long as we hold the T-line on a daily basis, should be looking higher here, at least short term. Just because I was anticipating, reasonable, deeper 3-wave decline doesn't mean I'm going to get one. But we'll see. Okay, and we'll go over the Dow Jones Industrial Average. And similar there, another doji day today. Still above the T-line on a closing basis. So similar implications. Now we do have a little bit of a gap down here from this reversal candle on the Dow, and we haven't filled that gap yet. So that is a little bit more, and we definitely tried to come up to fill it today, but we couldn't. A little bit more short-term bearish for the Dow than for the S&P. And we'll go to the NASDAQ. And NASDAQ, all looking quite strong here, really. And the NASDAQ's pattern, in my opinion, so the S&P is a contracting triangle. Well, I think the NASDAQ is a running triangle, and in a running triangle, you just make a new price extreme in weight B above the previous high, and that's the only difference. You still have your A down, B up, C down, D up, E down, okay, and then now we're possibly working 1, 2, 3, 4, 5 up maybe for our first impulse wave, possibly. But let me just draw your AC trend line, okay. Extend it out there, and then I'll draw your BD trend line, okay. And this is kind of what I have working for the NASDAQ. So earlier on in this correction, the NASDAQ, I couldn't really come up with a high confidence wave count until I had more data. But it ended up being very similar to the S&P. Only difference was it's a running triangle instead of a contracting triangle, but extremely similar pattern overall. And I'd say it looks like we're pretty clearly breaking out of that as far as the NASDAQ goes. So the tech leadership likely reasserting here. But no, on a shorter term basis, we're still above the T line on the NASDAQ. Had a doji day. So further short-term consolidation or not, still bearish, or sorry, still bullish overall. Although I just don't see a, short-term trade set up here just yet. I'm waiting for it. And we'll go to the VIX. And the VIX still very tame here. Nothing concerning at all. Every little bounce up is just a lower high, and we've really just gone to sleep in the VIX, which is overall bullish for equities. So that's probably good for now. I think I'll wrap it there. And one trading day left in the week tomorrow. We'll see what happens. I'll check in, probably on the weekend. I like to take some time off and just do it whenever on the weekend, but have some sort of update for you before they open on Monday anyways. All right, Serial Trader signing off.